Hi everyone, this is a technical analysis on WTI Crude Oil. Let's start with some fundamental background first. Crude oil eventually reached the 95 level as the resilience in the global economy and the supply cuts from Saudi Arabia and Russia caused an incredible rally in the past couple of months. The bullish sentiment, though, is now overstretched, and we are now starting to see bearish signs that are likely to end up in weaker demand and thus lower prices. In fact, the latest rise should weigh even more on consumption given the context of tighter monetary conditions. We are also seeing the US dollar getting stronger every day and the stock market falling, which is likely to add to the negative sentiment. All of the above might lead to lower oil prices going forward, especially if the economic data starts to deteriorate notably in the next few months. Now, in the daily chart, we can see that after tapping into the 95 level, crude oil sold off towards the 88 price area. From a risk management perspective, the buyers would be better off waiting for the price to come into the trend line here, where you can also find the confluence with the 50% Fibonacci retracement level before stepping in again to target a new high. The sellers, on the other hand, will want to see the price breaking through the trend line to buy it even more aggressively and take the price into the 65 region. On the 4-hour chart, we can see that we had a divergence with the MACD right when the price was trading into the 94 resistance. This is generally a sign of weakening momentum, often followed by pullbacks or reversals. In this case, we are still experiencing a pullback as long as the price doesn't break the trend line, which would confirm the reversal. The support around the 88 level is holding for now, but at this point we might see it break for the much stronger one around the 86 level. On the 1-hour chart, we can see that crude oil got rejected perfectly from the downward trend line and the 50% Fibonacci retracement level as the seller stepped in with a defined risk above the trend line to position for a drop into the major trend line around the 86 level. If the price breaks below the 88 support, we can expect the bearish momentum to pick up into the 86 level. The buyers, on the other hand, will want to see the price breaking above the downward trend line to invalidate the bearish setup and position for a rally into new highs. Alternatively, as mentioned previously, the buyers will be waiting around the 86 level here with an even better risk to reward setup to position for a rally into the highs. Today on the agenda, we have the ADP report and the SM Services PMI. Tomorrow, we will see the latest jobless claims data, which continues to show a solid labor market. Finally, on Friday, it will be the time for the NFP report, which is the only one the Fed will see before its next rate decision. The oil market is likely to respond negatively to bad data and positively in case of good figures.